I want to first go to you, Rahul, on the reaction that we're seeing in auto, and of course, quite a bit of news flow overnight. You have the likes of Bajaj Auto that have posted numbers, Ola Electric disappointed, and losses widening, revenues declining, and then you have something like a Lumax that's seeing such a spurt. So, if you were to play the automotive story right now, where would you deploy?
So the way we look at auto is as an extension of consumption, and I think most of the players, if you see in the auto sector that have done well over the last 2 years as well, are the ones that actually have a better premium portfolio. So while I wouldn't want to read too much into one quarter's results on Bajaj, I think if you just look at Eicher Motors numbers, both the monthly sales numbers as well as their quarterly performance, it's actually been an outlier in the overall pack. And I think that comes as no surprise because if you look at the consumption side as well, what's doing well? You have hotels doing well, you have Alco-Bev stocks doing well, so aviation doing well. So this seems to be a natural extension. So our top recommendation there for people who want to enter into auto would still be Eicher from a two-wheeler perspective. I think if you want to play, an entire basket of auto in a sense, then you can probably look at Mahindra and Mahindra. So you get passenger vehicles, you do get tractors. Through their acquisition of Swaraj, of course, they have strengthened that play, and it's a proxy on rural recovery as well. So I think Mahindra looks like an interesting play. Of course, the stock has gone into an orbit over the last few years, ever since the management first, indicated that it's now going to strictly focus on return on capital employed, something that one of their component players, Motherson Sumi, has done so well and been a great wealth creator. But since you mentioned Lumax, Alex, I would like to throw in a name that we recently initiated on, which is called ASK Automotive, which is basically into the precision space, safety cables. And I think if you look at the kind of numbers that we are projecting there, it's almost about an 18-19% CAGR on the top line with margin expansion. You're looking at about, I think low to mid 20s kind of earnings growth. The return ratios are about 23-24%, and the valuations would be around 19-20 times. In fact, they were recently at our conference as well. We saw a great deal of institutional investor interest. So from an auto com perspective, I think our top pick would be ASK Automotive. But I think if you're playing it through large cap OEMs, I think from an auto conglomerate perspective, it would probably be M&M, and from a two-wheeler perspective, I think the top recommendation would be Eicher. And ASK actually is a proxy on two-wheelers as well. If you remember some time back, Alex, there used to be a stock called Jamna Auto, which was quite the favorite of the market when the commercial vehicles were doing well. So I think you need to identify component players that are doing, good proxies on a reasonable to good OEM growth. And I think this could probably be one that will probably positively surprise over the next couple of years.
Okay, some news coming in on gold loan companies. So the Department of Financial Services has examined RBI's draft guidelines. There's actually a tweet out by the FinMin on this. And they are saying that they want this to be implemented by the 1st of Jan 2026. Vishwanath Nair joining us for more details. Is it an extension of the deadline? Just give us some context on this, Vishy.
Right, Tamanna. So, yes, there is an extension of the deadline. This is supposed to be implemented later this year. And now, because of certain ground level implementation issues, the finance ministry is suggesting, the DFS specifically is suggesting to the RBI that you implement this only from 1st January. Now, I think more importantly, this is the first time that the DFS has come out very publicly and given its feedback on certain guidelines from the Reserve Bank of India. We have seen in the past, other cases like, for example, the project finance situation where discussions were ongoing privately between the RBI and the DFS. This is the first time that the DFS come out publicly. Now, what exactly are they saying? They're saying that the guidelines might be a little too onerous on the small value loan borrowers, and gold loans are widely used specifically by farmers for agricultural purposes, and the RBI guidelines sought to have sort of uniform guidelines between gold loans which are used for agricultural purposes and non-agri purposes. So clearly the government is showing that they want to protect the small value borrowers, specifically the agri borrowers. So up to 2 lakh rupee loan worth borrowers should not be included in the guidelines. This is the feedback that the ministry is giving to the RBI. Essentially, the RBI has set a 75% flat loan-to-value ratio, while for non-agri gold loans, 75% was always the norm. For agri purposes, banks used to give higher loans against the jewelry. Secondly, the RBI had prescribed in the draft guidelines that banks should probably check for ownership and get thorough ownership details and only after that extend loans. This obviously would have led to some delays by the time the loan would have been disbursed. The ministry is saying that small value borrowers should not be affected. The other thing was banks were required to give a certificate of purity of the gold that they were accepting. Plus, the kind of gold that they accept was also limited to jewelry and certain specific gold coins issued by MMTC. So clearly, those were all going to be issues on the ground level. Those were all going to lead to delays in loan disbursement, and that's why you're seeing the ministry stepping in.
Okay, Vishy, thanks for that. Now, Rahul, I would want you to come in on this one. Good morning, of course, and thanks for joining in. And I also want to get a feedback from you, if you haven't spoken it about already, about what the post-conference key outcome is, because I believe you had an investor conference, Nirmal Bang investor conference. But just a word on this issue first, Rahul. What is your view on these gold loan providers and on NBFCs at large? Because the general theme seems to be that if the rates are going to come down, NIMs might contract for banks, swap out of banks, go into NBFCs, the cycle is turning.
So, Neeraj, that's been the trade for a while, and we have been very positive on gold finance for many a year now. But I think the biggest problem with gold finance companies now, Neeraj, has been the leverage. And I think these were companies that used to operate at one point in time at a 5x leverage. What I mean by that is if you had a 4% ROA, you had a 20% ROE. If you had a 5% ROE, you had a 25% ROE. And that leverage has come down substantially over the years. So let's take the industry leader in this case, which is Muthoot. I think if you look at the sectoral deployment of credit data that the Reserve Bank of India comes out with, the maximum loan growth that you're seeing in the Indian economy for many a month now, if not for a year, has been for loan against gold. It has not been personal loans, housing loans, auto loans, credit card loans. It's actually been loan against gold. It has shown up very well in the numbers, but I think from, obviously because of a lot of regulatory changes, if you look at our own numbers, I don't think we are projecting more than a 12-13% top line growth for Muthoot over the next 2 years. Your point about margins is obviously taken because that factors into the overall ROE, because ROE is a function of profitability, and in NIM's contract, that is going to have a direct bearing on the profitability of the entity. Now, you are having, while the optical ROA looks very good at about 4.5% for Muthoot, the problem is the ROE has now dipped down to less than 15. You have it coming at about 14% for an entity that used to go between 20 to 25. Now, the question is, what do you want to value this entity at? Because there was a time that people used to even ascribe 4.5 times. My sense is the best you could value this entity today is probably what you would value the best bank in the country at. So I think anything more than a 3.5 would be a bit of a stretch. So if you're looking at investing in companies like Muthoot, Neeraj, I think you need to have realistic expectations of about maybe 12, 13, 15% kind of stock price growth. The other thing also, Neeraj, is that our commodities desk does not believe that gold can re-rate substantially from here because it's had a 26% growth in the last 1 year. So I think you need to keep all these things in mind, but our preference would be more towards NBFCs, and we would prefer names like AU Small Finance Bank and HUDCO to gold finance companies at this point. But if you have to be with gold finance, then Muthoot is your play.
No, thank you, Rahul. Nobody has to be, I'm presuming.
And
but
just one very quick question, since you forgot to answer that, Neeraj. The mood at the conference was good.
Yeah. So, Rahul, sorry, just one thing that's specific here. I just wanted to know, I mean, there's so many people trying to think, right? Should we bet on large caps, mid caps? Within mid caps, what do you bet on? You would have featured some companies, you would have got a takeaway from some companies. What stood out in terms of management commentary and the mood of the conference?
It was still very mid-cap focused, Neeraj. I think we had about 70-odd companies focused, and I think the maximum attendance that we had was for a company called Wari. And the stock was up 10% the next day. And that's just on a lighter note. But I think the focus definitely in terms of participation, where people were looking for ideas, I think definitely the bias was more towards mid caps. I think the maximum interest that we saw was in defense allied plays, auto component, and NBFCs. But overall, we had close to about 155, people from the buy side attend over 2 days. And I think the mood was relatively more positive than I've seen over the last couple of quarters. But definitely, I think on a relative basis, if you're asking me to classify it on a market cap basis, the focus was definitely still more towards mid caps than it was towards large caps.
Okay, Rahul, we'll leave it at that. Thank you so much for taking the time out and being with us today. Really appreciate your time.
Pleasure, Neeraj. Thank you for having me.